The trend-defining Bitcoin trader, the trend-defining move Bitcoin traders must watch this weekend. Hey guys, it's Keith Allen. Hope my audio is working okay today. And man, there's something happening right here that you got to know. So let's give a second for some folks to join. And I'm going to tell you straight up what's going on here. It's Black Friday, right? Lots of huge deals going on. And I've been browsing that. I actually had a bunch of family and friends over for a Black Friday Bloody Mary brunch this morning. And then this afternoon, as people are, if things are starting to wind down, I take a peek at the charts. And when I saw this move, I literally stopped everything I was doing to do this live stream. So this is something you're going to want to see for sure. And those Black Friday deals, yeah, those are something you're going to want to see too. I've got links to all of them in the description down below. If you're watching on YouTube, you'll be able to see that. And if you are not watching on YouTube, you can DM me and I'll send you those links. Obviously, Material Indicators having a huge sale, 40% off all plans 3 months and longer. I personally also use 3 commas and TradingView. A lot of you, most of us, I think, a large number anyway, use TradingView. It's a fantastic charting platform. And so those guys have great deals too. TradingView is offering up to 80% off plus a month free. 3 commas up to 70% off. So again, links to those deals are in the description of the live stream. And with that, I want to climb into exactly what's going on here. I want to remind you, live chat is open. So if you would like to engage with me, I'd love to have you for sure. We've got lots, a lot to talk about here. And I've really been alluding to these things for, almost 2 weeks probably. And so the things that I thought would develop, not only are developing, they're happening right now. Wasn't sure how long this was going to take, but it's literally happening right before our eyes. So this, in my mind, is a trend-defining move, and I'm going to show you exactly what I'm talking about and what this means for both bulls and bears, bull and bear case scenario. So had a little issue with the music playback when I was first starting this thing. Which threw me off a little bit. Just want to make sure that you guys can hear everything okay. So if you don't mind, somebody just chime into the comments and drop a comment that you can hear me okay. And let's go ahead and get into it. First of all, I want to share a screen and show you what the liquidity movement has been. I've told you for a long time, liquidity, order book and order flow data is something that I pay very, very close attention to, obviously in fire charts. And we have seen some pretty interesting moves here since, I guess, about Wednesday, developing really an aggressive charge towards back towards the yearly open, right? We had some, let's see if I zoom out a little bit, we can see a little bit more happening here, right? We saw some bid liquidity coming in heavy here that stacked up and that started getting things moving. And then we had this move where some of this stair stepped up a little bit higher into the range, and that really got things going. And then just about 2 days ago, another block of bid liquidity came in, and that really seemed to set things off. And so we obviously wanted to see that happen. At least bulls did. I guess bears who were short maybe didn't want to see that happen, but bulls certainly wanted to see that happen. And we had thin liquidity here, so it was very easy for price to move up, as you can see, right? Here's that stair stepping we talked about where that new liquidity came in and pushed price up higher. So now you can see a little bit coming in to support because things peaked here around 93. And now we've seen a bit of profit taking happen here. That's expected. But what wasn't expected is the massive dump that happened from here. So if we switch to absolute CVD here on fire charts, we can see exactly what the value was of that dump. And at this point, market was net 212 million in inflow. This is just market orders, by the way, on one exchange, 212 million. And then that sell was 212 down to 44. It was a lot. Okay. Well over 150 million. I'll tell you real quick, right? I'm not doing the math on my head. I told you it was Bloody Mary Black Friday, deal, right? So I'm not going to do that math in my head. What I say, it was 216. That was $172 million market dump in moments, really. I mean, this took what, maybe from 15, 30. Okay, so that was 2 hours, 170 million total. Maybe a little less than 2 hours for that to dump. But what's more important is what's happening in the technicals here. So at the moment, there's a little bit of bid liquidity trying to hold this back up and keep things going, and it could, right? I've told you guys many, many times that it is the especially in higher time frames, it's the higher time frame charts that we have to watch and see where things are on these closes. Here it is on the lower time frame. Let's see what this, with a more granular deal, what that timing was. So that was actually 1430 until it all came down. So, but this big move, the biggest move was 30 minutes, 25 minutes. Okay. The biggest dump was a 25-minute deal. Okay. And you can see, but it started up here. Boom, 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 boom. And then that last ripped through the most liquidity. So there's that. But what does this mean? Well, just seeing buying and selling without any context, I guess, doesn't make, a whole lot of sense. But when we put this in the context of what's happening in the chart, then we get a different scenario here. And on this chart, I'm going to expand just the candle chart here for a second. You can see lots of lines here. And I've added some new ones just to make things more complex. Obviously, our moving averages here on the daily. Our timescape levels. Here's the yearly open. Here's the first week of the year. And some other ones, obviously, the 21 moving average down here, which is really coming right into range here with the yearly open, making this even stronger technical resistance. And if we look at the weekly time frame, obviously this 50-week moving average is a big one that everybody's watching, right? Understandable. But I want you to look at something here. So not only did we have a rejection from the yearly open, and is it close enough to call it a rejection from the 21-day moving average? Let's see, the 21 is sitting at 93,774. And this candle so far went as high as 93.1K. So certainly close enough to that 93.3K yearly open to call that a rejection, and very close to that 21-day moving average. Certainly, we're rejected from this range here at the moment. But again, we're talking about higher time frames. The yearly open is not time frame dependent. The yearly open is what it is. And that's the great thing about this timescape levels indicator, is that there's no lag, there's no repainting. It is established the instant the candle opens, and it stays there until the end of time. And this is so far doing exactly what I thought it would do. And the reason I thought that we would see a rejection here is this. And it's something I've been talking about for at least a week. And that is the RSI, the weekly RSI to be specific. So let's switch over to the weekly time frame again. And let's look at see where this RSI is, where it was and where it is. So it was, it had dipped down as low as 35.76. And this line, you'll see this line that I have here. Let me expand this to make it easier for you. This line is at 41.5. Earlier today, this RSI was literally at 41.6, and it has since pulled back. Now I saw this on a different, maybe I saw this on a different chart. Oh, there's that Trading View Black Friday deal I told you about. Again, link to that is in the description. So this was looking like a reversion, right? Like a rejection. And now it's just eroded. That's interesting. Let me see something here. So if we look at it on the daily time frame, this is still a rejection from this level. Look at this, rejected. So what does that tell you? Well, as I have stated for a long time, and really it's the weekly, the fact that it shows a rejection is right from the same level here on the daily is maybe a little coincidental, but the fact that price is below this level, I've shown you this a few times here over the past week or maybe 2 weeks. Anytime that price is trading below this level, that really is for me, it's the final confirmation of a bear market, excuse me. Below that line is bear, above that line is bull. This is a weekly indicator, and it has been accurate 100% of the time it's occurred in Bitcoin's history. Okay, let's go back to 2015. 100% of the time that we are trading below this line, look, happened right here. We crossed it, came down. That was bear market. It happened briefly, and there have been fake outs like this, right here. But then the COVID crash came, took it down briefly, and then a recovery. This one, obviously much more pronounced after the 2021 top. We had these death crosses here. And then what happened? You can see where it broke down here and look up top. This was it. This was the final confirmation. We lost the 100-day moving average at that point, and boom, price came down. So if there's a bull case to be had, it's that there was a recovery or a bounce from this 100-day moving average. Okay. But if we add the timescape levels back in here, we can see we also have a timescape level down here that held. But this is about the only bull case. And the fact that we're still on a recovery from this dip below means that things could still continue upward, right? It's not necessarily over because there is some upward momentum here. But you want to be watching this very, very closely for the weekly close and see if there is a surge that gets us back up here above this 41.5K, this 41.5 level on the RSI. And if there's a reversion, that's going to tell you that we're going to see more downside. Now, this could continue on this trajectory and still not clear for an undisclosed amount of time. But considering the momentum that we've had since Wednesday, and considering the fact that we have a huge national holiday here in North America, our Thanksgiving holiday, there's some history in the fact that after big holiday weekends like this, when families and friends get together, there's a long history of Bitcoin price appreciating after weekends like this, because people talk to their friends and they're like, hey, what's up with crypto? And they tell you what's happening. Now, the market sentiment has been pretty sour here since mid-October, right? Since that October 10th dump. And maybe we won't have that kind of impact. But since we've had this rally coming and the market is still in flux and unsure of what's happening, maybe we load in some new some fresh blood this week. And what would that mean, right? So let's go back to this chart. Let's think of something here. Let's think of put a few scenarios in play. So we have this timescape level that needs to be tested. It's the yearly open. And we have look at all these levels. These are the key levels that really need to be crossed for the bull market to continue, right? The first one is, and we've already cleared one hurdle in reclaiming this 100. We also put the where was it back here? Oh, the monthly. We put the 21 month. This was the first hurdle, was putting the 21-month moving average in our rearview mirror. And we've done that so far. Of course, we have to close above this. Monthly close coming up on Sunday. So this Sunday's close is going to be huge, right? It's going to be a weekly close and a monthly close. And so we'll be watching for new trend precognition signals here as well. So this is a big deal. Got to make sure the monthly closes above this 21-month moving average, which currently sits at 86.8K. Then we look to the weekly time frame, and we would love to be able to clear any of these levels. First one being the yearly open timescape, which has confluence with the 21-day moving average. If we look at the weeklies, the next weekly technical indicator beyond the timescapes, and notice this 21-day is straddled right between the yearly open in this first week of the year, this January 6th timescape level, and the trend line sandwiched right in here. So these are a big deal, right? Here's the trend line. Here's the trend line, the macro trend line from the year going up. This is the trend line we need to reclaim. This is the current trend line of this downtrend since early October that we would need to clear, right? And all this confluence really right here coming into focus in that 96 point, 96, the mid 96, 97 level, because this January 6th timescape is up at 98.3K. So this whole zone is really, really tight, really heavy, strong technical resistance. And then you'll have strong technical resistance on the weekly time frame when we get to this 50-week moving average. And that only comes into play if Bitcoin can break these levels, right? Reclaim the trend, clear this timescape level. Now think of what would happen here, because a lot of the market is short. Hey, Joe, good to have you with us. Joe says 93. Yeah, 93 is the level we hit today. That yearly open is at 93.3K. So we currently dealing with a rejection from this right here, Joe. And then there is this 50-week moving average up at 102.5K. This one is really where the downward momentum kicked into high gear, losing this one. This was a classic death cross between the 50 and the 200 right here. That's what really helped accelerate the downward momentum. And we have we had another death cross between the 100 and the 200. It's just ugly right now. All of the moving averages on the daily time frame are inverted. The green 21, the red 50, the blue 100, the purple 200. So when these things start going the other way, when this RSI on the weekly time frame clears this 41.5 level with closes above that 41.5 level, when we clear this and we start unwinding these daily moving averages, you're going to see things really take off. That's when the next leg up happens. Now, does this happen this week? Does it happen before the end of the year? So imagine this. Imagine, I was telling you a moment ago about the scenario where families and friends get together on holiday weekends. We see a pump on Bitcoin or maybe even the broader crypto market. And what happens? So right now we know a lot of the market is short. And this weekend, or since Wednesday, many have been getting squeezed. Many are short from here at the yearly open. And so a pump above this would squeeze those shorts, lure in late longs here, and maybe the rejection comes from here. Maybe this is it. Maybe we pump a little higher, it comes from here. Maybe it comes from here, or maybe we get it all the way to the 50-week moving average, which sits up here around 103, just shy of 103 right now. And we have a rejection from here and punish those late longs. That would sufficiently squeeze the early shorts, and it would punish late longs. And then you get that retest of support. Okay, so if we clear this, if we do clear it, regardless of when we clear this yearly open, I would expect a retest of support there to establish foundational support and then get us to the next leg up. So look for that. Look for us to break this level, these two timescapes here at the yearly open and that first week of the year. And once these are broken, look for a retest of support, whether it lands here or here, remains to be seen. But I would expect that support test to happen before we get really a sustainable run upwards. And then the last real barrier is the 21-week moving average, which currently sits around 111. You clear this, and then, and only then, can we really talk about getting back to all-time highs and price discovery. The all-time high, of course, here at 126 and change at the moment. So that's about it in a nutshell. I really want to make sure that you guys are paying attention to this, especially on the weekly time frame, and that you are keenly focused here on this RSI on the weekly time frame. This is the line that separates bulls and bears, and I'm talking macro trends here, right? Up here above this line, a weekly close above this line is a high likelihood that we head back into that bull market trajectory. A rejection from here is a indication there's a high probability that we're headed to paradise. Simple as that. If there's one thing that you're looking at the charts, one thing, I'd be watching this at the macro level, and I would be watching, well, that would be the one thing. If you're watching multiple things, and you should be, you're watching what's happening here around these timescape levels. You can see them all here on the daily time frame. I'll even clear out the trend precognition and just clean up the chart just a little bit for you, make it easier to see. Yearly open. We have one rejection. One rejection doesn't mean the end of the day. At the moment, we have some liquidity in place trying to keep things elevated, but that's only 11 million at 89K. So what I want to see happen here, just like we saw earlier in the week and last week, was more bid liquidity coming into place. And ultimately, that bid liquidity started to move up. They actually raised liquidity from down here in the 70s and moved it up higher, get it into the active trading zone or closer to the active trading zone. And that, these guys got filled in here, and this helped push price up, keep things elevated. So you want to see the next move. If you're a bull, you want to see more bid liquidity coming into this range here, really above 84.5K. And the closer to the active trading range, the better in terms of getting it to push price. And so at the moment, we have sell orders stacking here between here and 100K. Not a ton, but certainly a significant amount, over 100 million up here. So that's why we're running into some friction here. So what's the next move? Some of this going to stair step up and go up a notch. And that's what needs to happen to push price through this. We need to see more bid liquidity come in, really above that 84.5K range to push price upwards. And the closer it is to the active trading range, the more impactful it should be. Simple as that. Hope that helps, gives you some things to focus on through the course of this Black Friday weekend. Again, don't forget to take advantage of these great deals. This is like the time of year where you can literally save hundreds, if not thousands of dollars on the tools that you use, depending on what you use in the plan. You know, if you go for those annual plans, you get the most savings, and it really can total up to thousands and thousands of dollars. I mean, just on material indicators, you're going to save nearly $1,000 on a 1 year premium plus plan. Simple as that. And if you add in 3 commas or TradingView or all of the above, I literally, all of my subscriptions happen this time of year. And you can stack your time and you don't lose the time that you paid for, right? They just extend off of what you already have. So I encourage you to save yourself some money. You can use that money for your holiday shopping, right? Save yourself some money by shopping today and this Black Friday weekend. I promise you, you're going to thank me for it, because it's going to put money in your pocket. You're not going to keep, let's not fool ourselves. You're not going to keep that money. You're going to spend it on something else, but you're going to have it to spend on something else. So do something about it. Take action. Save yourself some money. Get the tools you need to get the edge you want, and do it right now. Again, links to those are in the description. If you're watching on YouTube, you'll get those links. I don't put them in the X chat because I don't know, the algo hates that. Extraordinary Cave Trader says, I don't have money. Well, takes money to make money, my friend. And so if you are trading at all, you need trading tools. You, at the very least, you need a TradingView, something like TradingView to chart. At the very least, something like Fire Charts. You know, hey, maybe you're not going to go for the annual Premium Plus plan, but you can get in there and get something that can help you navigate this market. And the sooner you do it, the faster you'll realize, gosh, I should have done this a long time ago, and I would have had money, right? If you don't have money because you've been losing money, maybe you need to put your money into something that can help you trade smarter. And I'll leave it right there, bro. Have a good one, guys. I hope you enjoy the rest of the weekend. I realize that this is a largely an American and a North American holiday weekend. It's called Thanksgiving. And I am grateful for lots of things in my life, my amazing family, and amazing place I get to live, and for you guys and your continued support. Appreciate that. Share the love. Smash some buttons. Make sure you hit the subscribe so you don't miss any future streams, and take advantage of those Black Friday deals now. Have a good one, guys. Enjoy the rest of your weekend.